We're getting real close to the moment when it's your last chance to make massive money in this crypto cycle. Everything is lining up right now, and if you blink, you'll miss it. Not because crypto's going away, but because the game is changing and really fast. So in this video, I'm going to walk you through 10 reasons why right now, yes, right now, is the narrowest window you'll get to build wealth in crypto before the next wave completely locks you out. So let's get into it. Number one, the pre-halving window is closing. In case you didn't know, every 4 years, Bitcoin goes through a halving where the supply of new Bitcoin that is created every single day is cut in half. In this last halving, we went from 900 new Bitcoin a day to 450 a day. After the 2012 halving, Bitcoin ran from $12 to over $1,000. After the 2016 halving, it went from $650 to nearly $20,000. And after the 2020 halving, we saw an explosion from $8,500 to a peak of $69,000. Nice. And we just had another halving in April of 2024. Historically, this is the last boring part of the cycle, the accumulation zone, before crypto absolutely rips. Bitcoin seems to make its biggest moves 12 to 18 months after a halving. And well, here we are at $120,000 Bitcoin. And people who wait for clear signals always end up buying in late. Because none of this stuff is an exact science, and the waters are always a little bit murky. This part of the cycle has felt slow, uncertain, quiet, and that's exactly why I think it's an opportunity. The moment it starts to feel obvious, you'll be late, and the risk-reward will be gone. Secondly, institutional floodgates have now opened. In January 2024, the SEC approved US spot Bitcoin ETFs, and since then, institutional money has poured in. And we're talking over $50 billion in net inflows by July of this year. BlackRock's ETF has raked in over $37 billion alone and now manages around $84 billion in assets. Fidelity, ARK, Bitwise, all seeing hundreds of millions in weekly inflows. And so far in July, it's just been big week after big week of money flowing into these ETFs. And this isn't speculative degen money. This is retirement funds, insurance firms, and sovereign wealth capital moving in quietly, consistently. They're not waiting for dips. They're locking in exposure for the next 5 to 10 years. Not to mention there are more and more companies and institutions adding Bitcoin to their balance sheets. Yes, MicroStrategy has been the one with all the press, but now there is a super long list that's growing every single day. Names like Galaxy Digital, the Blockchain Group, K33, Metaplanet, and even GameStop. Reason number 3 is that regulations are still really uncertain. Crypto was built for permissionless finance, but the regulators might be finally catching up. Protocols are now geo-blocking US users, airdrops are requiring KYC, testnets are excluding farming behavior. Given the political climate here in the US, these regulations could get more favorable for us crypto folks, or in the future things could get worse. Either way, regulations, for better or for worse, are coming soon, and we don't know 100% what that means for us. It likely means that the Wild West days in crypto are ending. I don't think that means the opportunities in crypto will end. There just might be fewer of them, and the really crazy ones might be harder to find if they even exist at all in the future. That said, I do believe with all my heart that there are opportunities right now in crypto where you could invest $1,000 or hell, even $100 and turn that money into $1 million. Will that be the case in 5 years still? I don't know, but I'm not going to wait to invest then to find out. Because reason number 4, narratives are still cheap. If you've been in crypto for a while, you know that narratives move markets. Not fundamentals, not tech, narrative. Those other things really do matter, but people really do primarily buy this stuff in crypto based on the story being told. Ethereum was not the first smart contract chain. It was just the one with the most compelling story. Same with DeFi in 2020 and NFTs in 2021. Early believers made fortunes because they were ahead of the story being told. And right now, brand new narratives are forming. Narratives like Bitcoin as a macro hedge and institutional asset, AI, crypto gaming, decentralized physical infrastructure networks or DePIN, meme coins, and RWAs or real-world assets. Buying tokens and coins that fit these narratives is still super early at this stage, and all of these narratives are still misunderstood by the masses, who, by the way, aren't even here yet, which is why buying into any of these is still cheap right now. So times like this are when you should think about buying, not when CNBC is telling you step by step how to buy a crypto token or when stuff is trending big time on Twitter. I'm personally going super big into AI, gaming, and DePIN, and I actually just bought an AI play that is only a teeny tiny microscopic $400,000 market cap right now that could easily do a 100x or more in the right market. And you can see all my buys, sells, my portfolio, and a ton of proven income strategies in my premium crypto membership, Sleep Money Club. You can use that QR code right there or check the link down in the description to try it out. The next reason number 5, is that airdrops are peaking in value and frequency. So far, we've kind of been in the golden age of crypto airdrops. If you use the right chain, you could have earned thousands or even tens of thousands or more just for being early and for using this thing. And that's with no upfront capital required. For example, some people who farmed the hyper liquid airdrop are now millionaires, but this won't last. Protocols are tightening up eligibility, they're blocking regions requiring KYC, penalizing Sybil behavior, and some projects are just electing out of the airdrop model altogether. We could very well be nearing the end of the airdrop era. So if you're not farming now, you're going to be missing out on free money, literally free money. Because soon, some airdrops, the ones that actually happen, might only reward whales or verified users. But even if this isn't the end for airdrops, getting into some right now could pay off massively in just a few months. Whereas waiting means you will miss this opportunity altogether. And I do have a video with a bunch of opportunities to earn from airdrops for free right now. Reason number 6 is that low valuations equal maximum asymmetry. Most altcoins are still down 70 to 90 or more % from their 2021 highs, or heck, even that far down from just their prices earlier this year. So thanks, tariff war. But this is not 2018. Many of the projects that are around now have working products, real users, and believe it or not, I can't believe this is a thing we have to celebrate now, actual revenue. And just look at DePIN. Quite a few of my favorite DePIN projects are boasting millions of dollars in real revenue each year. Oh, how far we've come. Now, if we go all the way back to 2019, Polygon was trading just under 2 cents. And in 2021, it hit $2.80. Solana was $2 and it ran all the way to $250. The people who caught those gains did not wait for confirmation. They bought when it felt uncertain, boring, or borderline stupid. Kind of like buying right now. So this could be your 2019 moment. If you only buy when it feels safe, you'll always be too late. I found that if people think what I'm doing is dumb, I might be on the right track. So many people told me that it was dumb or I was stupid to put most of my money into crypto when I got started almost 10 years ago. Well, who's laughing now? Me. I'm laughing now. Plus, most people don't even think we'll have an altcoin bull run. So what better time to position yourself than when sentiment is still crappy and retail and a lot of people haven't shown up yet. And speaking of, reason number 7 is that retail still thinks that crypto is dead. Most people think crypto is a scam or a dead trend, and they're wrong, and that's your edge. The average person has no idea that Bitcoin recently crossed $120,000. It's like that party meme with that guy in the corner. But just think about how stupidly insane that is. But also, most people aren't tracking ETF inflows or TVLs. They're still sitting on the sidelines, keeping that bench real nice and warm. And meanwhile, under the surface, crypto is growing. Quietly, efficiently, institutions are buying, protocols are evolving, and early adopters will get paid big time. And by the time retail re-engages, the cheap tickets will be gone, and they'll probably be buying your bags for a premium. Reason number 8 is that right now, massive tech shifts are aligning. AI, robotics, edge computing, tokenized infrastructure, these are not isolated trends. They're all converging, and guess what's in the middle? Crypto. That's us. There are projects that are already empowering decentralized compute and AI ecosystems. Others are creating token incentives to build the physical infrastructure for the internet of the future. So really, this is bigger than finance. Crypto is becoming the economic backbone for the next internet, and all the value will be hidden under the hood. Most people won't even know they're using crypto, but the profits are very real, and they will show up in your wallet if you're early. So if you're only looking at the price charts, especially right now, again, look at all the altcoins, then I think you're missing the point. This really is a tech revolution and not just some trading strategy, which is why it's important to know where we are, which point number 9, we're in the middle of a once-in-a-generation wealth transfer. $70 trillion is moving from boomers to millennials and Gen Z. And where do you think that money is gonna go? Not into bonds or CDs. It's going to go into apps or platforms and most likely decentralized assets like crypto. The younger generation doesn't trust banks the way their parents did. They want autonomy, they want control, and guess what? Crypto offers both. And as this capital shifts hands, the financial rails shift too. Crypto isn't replacing the dollar, well, yet at least. It's replacing the structure around money, how it's held, moved, and invested. So you want to be holding the rails that all that new money flows through, and not chasing after it after it's been allocated. And it is true that crypto is extremely volatile right now. One day, when Bitcoin is $1 million per coin, it will not be as volatile. So your instinct might tell you that volatility is bad and I need to avoid this. But I think it's a feature, not a bug. If you wait for less volatility, you miss all that wonderful upside. So for reason number 10, you need to realize that your risk tolerance will never be this high again. And I don't know, maybe you'll also just never be this high again. Most people lie to themselves and they say, I'll invest more next cycle. Well, no, you won't. Life gets in the way. You'll get more responsibilities, less time, less energy, less risk tolerance. Just naturally what happens over time. And especially if you are younger and watching this, in this phase of your life, well, you can take some big swings. Not reckless, but bold swings. Because later you'll be managing more capital, managing liabilities, playing defense probably. 3 crypto cycles ago, I took some very big swings and I did make some great money. But I also lost money in that first cycle. But once I figured things out, I doubled down and I went really, really big into crypto that very next cycle. And that's the cycle when I became a millionaire, without even investing a lot of money to get there. So this could be your offense window, and it will not last forever. So if you don't take your shot now, you may never feel comfortable enough to take one again. Unfortunately though, you can still f this up. Like me, 3 cycles ago, losing money. But don't worry, I've got you covered. I made this video where I cover 8 absolutely critical mistakes to avoid if you do want to make a ton of money during the cycle, which you do want to do, right? Goodbye.